Hi everyone, I hope you're well. I don't know if you can see me. I think hopefully you can still hear me. We've got some live analysis today. So I was trying to connect to our YouTube site, but it seems to be, I seem to have some technical problems connecting to our YouTube channel. So that's not working for some reason. I don't know why. Edit destinations seems okay. How do I do that? No, that's not working. So we'll just drop that. So welcome everybody. Can you hear me? Those of you who are in the GoToWebinar, Jefferson, no images. He's saying, dear me, that's not good, is it? So you can't see my screen. Let's have a look. Jefferson, I've got some technical problems this morning, but you can hear me. Let me have a look. Let's have a look. Yeah, there we go. Let's see what you can see. There, you should be able to see me now, Jefferson. Can you see me now? Terry's saying you can't see me. Hopefully that's working. My webcam is not connecting either. It's one of those days today, isn't it? But it's live analysis today. So thank you very much. The restream service ain't working. Let me just tell my colleague about that until, yeah. And I'll be with you in 1 second, guys. So. Right, mega apologies everyone. Sorry about the hold up there. So everyone can hear me and you can see now. You can see my screen now. Hopefully, if that's okay. Let me just see who's talked to me. Good. Right. Okay. Seems to be going up and running. Right. Everybody can hear me and you can see the screen. Okay. Oh dear me, that wasn't a great start, but never mind. This is what happens sometimes when you try to do things live. They don't always work, and that's what's happened to me today. So just bear with me a second again. I'll get back to you, and we will have a full session. Obviously, I've lost my slides now, believe it or not. So where's my slide deck gone? So let's have a look. Right, let's get going. Usual disclaimer: trading is a risky. Trading CFDs and Forex is risky. So make sure you understand that. Hopefully, and see a few names that were in yesterday. Hopefully, you've managed to have a look at the PDF from yesterday. Had a look at the spreadsheet. If you asked for the spreadsheet, I did send it to everyone that asked for it. It was about I think 15 of you asked for it. So please, if you've got any questions about that, let me know about that. That's my ugly mug, which you can't see because the camera's not working today. It's one of those days today. Let's see if I can get the camera working today. Webcam. Let's see if it's going to work today. It really is one of those days today. Share my webcam. Let's look. See how it's going to work. Can you see? You can see me. Very good. Okay, so you can. The microphones actually come from the camera as well, so it might not be too good. But there we go. That's my ugly mug and my bad hair. It doesn't quite look like the picture. But never mind. Probability, simplicity, and time frames. My idea. And as I say, if you were here with us yesterday, this is very much what we talked about. Knowing yourself. So let's get going. Live analysis today, so it's all about you. Whatever you want to talk about, please stick it in the box. We'll go through it. It's been an interesting week, huge week next week. The big tech companies reporting, Amazon, Apple, Google, all reporting next week. Tesla report today. It's a huge couple of weeks. Microsoft last night. I don't know how many of you are stock investors or stock traders, but weakish outlook from Microsoft last night. The numbers were okay. It was the weakest quarterly increase for 6 years from Microsoft. last night. Weak PMIs, or good PMIs yesterday, but the UK ones were particularly weak. And obviously the Bank of Canada today, but more on that as we go forward. So let's have a quick look at the key events of this week thus far and what's yet to happen. So there's the minutes from the Bank of Japan kicked the key week off. Mr. Lagarde's had lots to say this week, not really moved the euro. Euro's round about 109. It's at sort of 6-month highs against the dollar. Dollar's weakened as we've started January. Stock markets have rallied. Yields have come off a tad. But inflation isn't going away. You can see those relatively positive PMI data there. We haven't got the US one on there for some reason, I don't know. You can see the big miss for the UK. Euro just grinding into positivity. That's a positive sign. But the recession or the slowdown in Europe might not be as bad as people were expecting. We've had helped by the amelioration in this massive spike we had in the gas prices. Germany now, Europe's big economic engine, not buying any gas from Russia anymore, cut that down really quickly. But can they sustain it, for next winter? But that's still obviously a year or so away with their imports from the US and the Middle East. So anyway, more on that as we roll forward. Weak numbers out of the UK, and the US numbers, for some reason not on here, I don't know why, were better than expected, but still weak, still negative. Remember with these PMI data, Purchasing Managers Index, it means it's what the people within these companies, whether it's a service company like like an accountant or a bank, somebody doesn't actually make anything, what they think their outlook's going to be like, what stuff they're going to be buying, that number. And then there's the manufacturing numbers, so companies that actually make stuff, what are they looking to import or use going forward. So anything under 50 for these numbers suggests that the sector's in contraction, or does say the sector's in contraction. Anything over 50 and it's expanded. So you can see here across the globe, countries, Germany, Europe, UK, US, still in contraction. But this obviously for December, it's the January number for December, excuse me. But looking forward, they are improving. Some 6-month highs in some of the numbers in the manufacturing sector and the services sector can be quite mixed sometimes as well. But the service sector, as far as GDP is concerned, as far as the size of a country's economy, accounts for much more input. So it's like 80% of developed economies, plus probably about 80%, 88%, something like that, is registered as a service sector. Manufacturing, very, very strategic, very, very sentiment. There's a lot of sentiment hanging on making stuff in your own country. Obviously, there's a lot to be said for making stuff. Engineers, cars, big bulky stuff, whether it's computers to cars or whatever it may be. A lot to be said for that. A lot of political gains in that. I mean, President Trump was a master at that. So yeah, that was a big number. Today, the main news today is, whoops, where are we gone? I've gone too far off. The main news today has been these heavy or better than or worse than expected inflation numbers from New Zealand initially last night, but particularly the Australian number here, coming at 8.4% a year on our annualized basis. Was expected to rise, but not as much as that. The quarterly number was expected to come down. That actually rose to 1.9%. The weaker or the lower number in the final quarter of 2021 was dropping. 2020 was dropping out of the equation. So this was expected to drop to 1.6 and actually rose to 1.9. That's the big kicker for the RBA, who meet on the 7th. So they'll be looking to raise rates. The market priced in a 15 basis point rise for the RBA for the 7th. On the 7th, it's now looking probably much more like 25 basis points, which is what we are expecting from the, which is what we're expecting later today from the Central Bank of Canada, the BOC. They've got their outlook, their rate assessment, their interest rate announcement, 4.5%. And Pratt's still got a little further to go. See what the press conference says later on. So that's the big market moving event, excuse me, of today, the Bank of Canada data. We've had sentiment index, we've had sentiment IFO numbers from Germany early today, which were showing, you know, some sort of support for sorry, somebody just sent me a message. I should have switched it off. Let me just answer it. And this idea that recession from the data yesterday as well, the IFO sentiment number this morning was quite positive as well. GDP, probably the big event that many people are looking forward to tomorrow. GDP out of the US. Again, really for me, again, those calendar, really the PCE, it's not on this calendar here. On Friday, the PCE price index on Friday is the Fed's preferred measure of inflation. So for me, that's just as important as perhaps the GDP number, which is, it says preliminary, but it's actually the second reading of GDP. 2.6% is expected tomorrow, and durable goods looking to lift things 2.5% tomorrow. So that's going to move the dollar tomorrow. The Canadian dollar could move on any surprises from the Bank of Canada this afternoon. Next week is obviously the end of the month, so we've got those end of month balancing going on. That happens obviously on Tuesday the 31st, and then we got the first week of the new month, which is topped obviously by non-farm payrolls on Friday the 3rd. So the new week kicks off with the close of the month. Retail sales, PMIs from China, lots going on, employment numbers, GDP from the Euro area, lots going on next week. Obviously, I'll say there's big earnings coming out next week as well. The big tech companies, as well as some other big companies, all reporting next week as well. ADP on Wednesday, 235,000 last time, around about 190,000 is the expectation. More PMIs from the US. Obviously, then we've got the key announcement for the week ahead of NFP is the Fed. Will they go with this 25 basis point reduction in interest rates? Will they go? I mean, they're not going to. It doesn't look like they're going to go to 50 basis points. That's out of the window. Although some hawks are talking about getting there quickly. Bullard was a particular talking about mention of that. Terence is saying, what platform? What news platform is this? Is our economic calendar, Terence. That this the thing you're looking at now there. That's our economic calendar from our website. So if you go to our website, this is the economic calendar here. So you can set it up. The ones I'm showing you now, they're just the high impact events, the big market moving potential events during the week. So these are the red events. Obviously, you can filter it out. I just look at these countries. You can look at every country if you want. I look at all the categories. And normally, I'll have like the medium events as well. That's what my normal calendar looks like. But for just predicting, looking at next week, we're looking at just the red events, okay? So you see the orange events, the medium impact events, and you'll see the one I was talking about. Not because it's next week. If we look at this week, the one I was showing you, the one I said is, for me, is quite important, although the calendar here only has it as a medium impact event. This number here for me on Friday, the the core PCE, Friday, yes. The index, the price index here is this number here. Could be quite key on Friday as well as obviously the durable goods and the GDP on Thursday as well. So it's here on our website, the calendar. So if you go to our home, this is our home page. So all our trading tools are under the tools tab here. So they add calendar. So there we've got our advanced insights. That's like an aggregator for how sentiment index. We've got premium. We've got the auto charts too, which is a great scanner and for markets. And you put your your pattern analysis. The premium trader tools, a whole host of stuff in there as well. Traders board I really like as well. Nice little tool that gives you a feel for what's actually going on at the moment. So here, this is a set again, like a sentiment index, how far the major currencies have moved against each other, the major 8 currency pairs. So today, the Aussie is very, very well bid, i.e. people are buying the dollar, as you can see, against the Canadian, against the New Zealand dollar is up 1.12% so far, and up 0.6 of 1%. Was much higher than that earlier against the dollar and against the week. So really, Aussie is the strong one today. The Canadian, then Kiwi is the weakest one today, and that's what the traders board shows. So there's lots of tools on there. The one you want to be looking at, Terence, is this on the calendar. Okay, so it's all here. We're here. We've got all sorts of stuff on there. So that's next Wednesday. Obviously Thursday, it's the Bank of England. So we got the Fed announcement on the Wednesday. We've got the Bank of England likely to move rates as well high, get more and more of a hawkish output from them. We've got the ECB also on Thursday. So it's a massive week next week, as well as all these big companies reporting earnings as well. So absolutely blockbuster week. And it finishes with a mighty non-farm payroll, 223,000, roundabout estimates are around about that 200,000 level again for this month. More on that obviously next week as it approaches. And the very important ISM services PMI data as well. Will it get back over that key 50 level, 49.6 last time? So there you go. That's the data to look out for. So lots going on. As far as this week's concerned, it's over to you guys. So what would you like to look at? What charts would you like to look at? Whether it's on an end of day basis, whether it's on an hourly basis, whether it's on a 5-minute basis. I'm here to help, basically, guys. So it really is all about you these days. And normally, when we're on YouTube, there's lots of people shouting at me saying, look at gold, look at the dollar, let me have a look. So it's a bit of a delay on GoToWebinar. So come on, there's lots of you in here today. So what do you want to look at? What markets are you interested in trading? What markets do you trade? Are you a mean revert? Are you an intraday trader? Are you a trend following swing trader? What time frame do you use? So put the asset you'd like to have a look at and the time frame. We'll start with day. If you don't put the time frame in, we'll start with the daily, and we'll work down or work up depending on what you want to have a look at. And we'll look at some of the key technical aspects of the position. So Raymond's first. Raymond's asking about the Nasdaq and sterling, pound dollar, on both the daily and the 4-hour time frame. So let's start with actually start with the Nasdaq. That's what you asked for. So on our platform, this is the futures platform. We have let me check. You can see the chart. Yeah, the chart's come up. I've just put the zigzag on here. It might look good. The line's a bit thick, but anyway, I hope you get the point. And hopefully you can see those black charts and the lines on the black charts. If not, I can use white charts. You let me know what you prefer, guys. So this is the daily, which is what you asked for, Raymond. So here we remain, let's just go, the length and angle of these lines are key to how strong this move is. So the longer the line, obviously the longer the move, the steeper the, or the, you don't want too steep an angle, but the steeper the angle, the stronger the, things that go up quickly tend to come back down quickly. So you're looking for, this is a nice trend, this one here down. This is a nice trend up so far. So far this year, the Nasdaq has got, perhaps many are saying it got ahead of itself with its earnings coming out. So far we're up 11 point, nearly 12%, 11%. Can you see that? I don't know if you can see that on the chart there. Nearly 11%. We've ran right to the key golden line on here, which is the 200-day exponential moving average. So it's a big, strong resistance wall. We've broken over the 21 EMA here on the, which is why this blue line's on here on the 10th or 11th, I think, I can't remember which day it was, the 10th or the 11th of the 10th, the close of the 10th here. So this would have gone long, this strategy here would have gone long here at 11,276. Would have added to it here as it broke over the 50-day moving average here at 11,462. The stop loss would have been down here, we'd pulled it up. We'd have been stopped out of our first trade here on this reversal, but we'd have got back in here earlier this week on the 20th, not this week, last week, on the 20th on that big up candle. We then went higher again on Monday, and then we ran into the big thick wall, which is the 200-day moving average. A few people would have got out of that position here. So this is the big resistance. So going forward, Raymond, that's your resistance, 12,000, the big round number, 12,000 for the Nasdaq. Today we bounced off that and went down quite significantly. Okay, but the daily you can see is still positive. The big blue line is still positive. The 4 hour is also still positive. This is just these lines here, guys, are just a simple zigzag I put in here just for demonstration purposes. Okay, so the 4 hour has gone long here on the 16th at 8 o'clock in the evening, and it's rallied, and would have got out there as it's come back under the middle moving average there. But it's still, these are slow to react as well, these lines as well. So as far as the 4 hour, it's still positive, it's still long, it's still above its 21 EMA at the moment, although it looks like it's coming down. So the 4 hour has support here. If you want to make these notes of these numbers, Raymond, here at 11,757, and then the next support is the high here, the end of the candle high at 11,700. So 11,700 is the big support area. First support comes in ahead of that, 11,757, call it 11,060. 11,760 and 11,000. They're the two big support areas. If this breaks, the next one is the 50 period moving average on your 4 hour, which comes in at 11,620. So they're the support areas. You can see the brown line, the yellow dotted line, and the blue line here for the 50 period EMA. Okay, that's your 4 hour setup. Okay, that's the resistance. Let's go back to the daily, which is what you asked. So big resistance 12,000. Support for the daily is also it's 11,700, but bigger. So that's 11,700 on the daily. The next support level on the daily time frame is there where the 50 simple moving average and the 21 EMA meet, and again that's 11,510. So some big round numbers coming into play for the Nasdaq. Terence, hope that's answered your question, my friend. But they both here on the daily and the 4 hour remain bid, i.e. the line is still in place. We go down to the 1 hour though, you can see it rallied yesterday and it's been short today. So that was that would have been a short trade here on open this morning at 11,837. It's retraced and stopped you out for, well, you might, no, it's honest, it stops up there. No, it's retraced. You could have got out because it's gone nowhere, but it's then gone short again here. So this went short this morning at 12 o'clock a couple of hours ago, and it's still descending because it's rejected that. So you'd have been short from this morning here at 11,838, and you're still short, and your stop loss is round about now where you got in. So you've locked in any profits. You're not going to. That's not going to be a losing trade on that 1 hour time frame. But certainly, Raymond, they're the 4 hour levels, and they're the 1 hour. They're the daily levels. Thank you. Great question. Good time frames. There's only two of you asked a question. Come on, guys. There's lots of you in here. Don't be scared. This is what today is all about. It's all about you. What you want to have a look at. There's only somebody else. Tobago has asked euro dollar on the 15-minute time frame. So let's have a euro dollar. So euro dollar is the 1 hour time frame. I've got the zigzags on this one, but never mind. So big psychological level for euro dollar, Tobago, is that 109 level, which we've crashed from this morning, having rallied quite nicely. So the 1 hour time frame, sorry, let me take it up to the daily. So the daily level, so this is still long. So the daily is still in a long trend with the big support here at 107.60. The 4 hour is also long, but it's tested, it's running out of steam. It's gone up and it's gone sideways, and the moving average started to move up yesterday with this rally, but it's come back down. It's still edging up, but looking much weaker. 108.63 is where we trade at the moment. First support 108.45, and then 108 itself to the downside. That's the support on the 4 hour time frame. Okay, why does that matter for the 15-minute? Well, let's have a look. So the 4 hours starting to roll over. The daily's still long. Yeah, okay, so let's go down. The 1 hour rallied yesterday, and that went short this morning. So as far as today's concerned, and you 15-minute traders, that went short on the end of hour basis, and it is still short. So the 15-minute will still be short. Okay, so end of hour traders would have taken a short position there at 108. 108.04, so 108.80, let's call it a round number, and we're still short here on the 1 hour basis. So going down, 30 minute is still short. Again, similar, he went short the next slot, so he didn't go short until, from a daily point of view, he went short there. Why isn't that gone all the way down? At whatever time it was, it's not showing me the time. At 9 o'clock, so it's 9 o'clock. He's gone short there. So from your trading point of view, Tibogo, you're also, whoops, this is the 15 minute, which is what you're interested in. This setup here, somebody's asking what this setup is. This is the simple, this is the exponential crossing strategy. There's lots and lots of strategies. This happens to be, what are the periods, exponential, simple? These, because it's intraday, Habibu, this one is, I hope you can see that's the 21 exponential moving average, is the magenta one. So my high one is 21, my middle one is 9, so it's the 9 period exponential moving average, the EMA. And the blue one, the one that's closest to the price action, so the lower the number, the closer the moving average is to the candles and the price action, is the 5 period EMA. I mean, it doesn't really matter what the numbers are. Some people use 3, 8, and 13. You know, but use a combination of them. This is always use this setup, and it works well enough for me. The brown line, also, if you want to add some others on there, is the 200 period exponential moving average. Okay, Habibu, let's answer your question. Okay, so going back to Tibogo was asking about euro. So this guy, you would have gone using this strategy here. You would have gone short here at 9:30 as well, at 108.94, and you're still short. You've gone short again. There's lots of ways to trade this. Watch the webinar on how to trade this particular strategy. You could have. So at this level, I like the ATR for generating targets. Okay, so at this level, the average true range. And again, if you don't know what the average true range is, watch the webinar on ATR. It's an absolute number, and it was about 6 pips. This pair, we're moving about 6.5 pips an hour over this last time period. So from there, at 108.93.4, we were looking for at least 6 or 12 pips. So at the moment, we're well in the money. And we're 337 pips, or 33 pips, 337 points to the good. We've moved 0.3 of 1%, which is not bad for the euro today. So, but what would have happened in reality is we would have moved down. We might have closed out as we'd hit the key 200 day. That might have been our first target level. But certainly you would have had your stop loss up here initially, very safe one. Your entry above the wicks of the candle, your entry is there. So that's your initial risk, isn't it? So that's your entry. That's your stop loss there, which is 168 points. Can you see that on the chart, guys? Can you see the little white lines? If not, I'll try. I can't make them any bigger, actually. Can you actually see what it says there when you put your, what you do, you right click your, that's the trigger. So you put the cross on. You go from your entry back to where the market's turned, which is up here. I mean, it could have been, really, you could have had your stop loss a bit tighter there at the close of the candles, but the close of the wick was all the way up there, 172 points. So we need at least 172 points to make it worthwhile, which we did, which took us to the 200 period moving average. So yeah, easy, not easy, but you know, relatively easy 17 pips there on that move. To the downside. It's retraced, so you might have got out there if you'd been moving out down. But at the moment, having got in there, this is still trending, and that's the beauty of these trending. I would have my I'd have my stop loss above this big candle here, although it's a bit, you know, 1, 2, 3, 4, 5, 6, 7 candles behind. And even now I could move it just above there now. I think that's where my stop loss would be. I don't want to get too aggressive, it's 15 minutes, but it's continuing to trend lower. Obviously, the thing to do when you're trading intraday is to be aware of what the next big news announcement is today. So what could move euro today. We've already had some news and it's bounced around. So if we go to today and look at the calendar, we said we had we've got the bond auction from the euro. This is all the countries now. You know, we've hang on, is that the right? No, it's the wrong day. That's fine. Oh no, isn't that is the right day? Sorry. It's Australia today, isn't it? 25th, and it's so any Australians out there or any Scottish Scots out there, it's Burns night tonight as well, the 25th. So forgot about that. Where was I? What was I talking about? I was talking about the euro. So what's going to, well, you know, it's Australia. It's a big holiday today in Australia. So really, the crude stocks, the announcement could move euro dollar. Obviously, any surprise from the Canadian central bank could move it. So at the moment, there's not a great deal of news to shake the euro out of this trend, other than obviously the US opening and some people closing out these trades. But at the moment, that trend looks pretty set, doesn't it? 108.58. My next line here is 108.45. And if we look to yesterday, we zoom this up. We look to yesterday, this is yesterday between the dotted lines here. The low of yesterday took us even lower than that, didn't it? So, although it was not sort of spiky, so we went to 108.34.6 yesterday. But again, you can see if you look to the left again on the time frame that you're trading, see that the previous day, the Monday, this was our low, this 108.45.6. We went lower yesterday, so the pressure or the trend, you know, the lows have got a tad lower. Next level, if you're in this trade, Tobago, your next levels you want to be looking at were the close of the candles on the time frame that you're trading. So we're sort of that from yesterday. Look, see this cluster here, we're sort of, sorry, it's there, isn't it? See these clusters there? So we're 108. There's that 108. Where my white line is, 108.54.8 is the next sort of target level. If it breaches this 108.60 level, 108.60 round number, so it might hang around there for a while. But as you can see, zoom this up, zoom this back up to today, you can see that that's still, you know, still trending. The candles bodies have got a wee bit smaller, but they're still red. There was a bit of indecision here, but then we went lower. Bit of indecision here, but more indecision here. It's 1 o'clock, just as we started talking. But the last half an hour we've gone down. And we've printed a new low for the day, haven't we? Here at 108.56.5. So that's the next. You know, you want to see your candles closing down there. Okay. So that was Tobago. I hope you're still here. I hope that answered your question. Next up is Langer asking about, can we have a look at gold? Any particular time frame, Langer? You haven't actually said it. Time frame. Friday, Habibi, I'll get back to you in a minute, my friends. Don't worry. Can we have a look at gold? Says Langer. Let's look at gold then. Everybody loves trading gold. So again, same setup. Do you want me to change the candle setup or the background? Anybody? We put a different, you know, different indicators on, no indicators. It's up to you guys. Let me know. If not, I'll just leave it as it is. Habibu, that's great. No problem, my friend. That's what I'm here for. So what's gold doing? You tell me, guys. Or Langer, you tell me. What is gold doing? Is it trending? Is it going sideways? From what you can see on the chart, you tell me. I'm going to shut up for a minute. Harasses everybody. Langer, tell me what or anybody that's here. Let's have a bit of interaction. What is the gold market doing on that chart that you can see? That's the 1 hour chart going back to the 11th of January. What is gold doing? Is it going up? Is it going down? Is it trending? Habibi says it's corrective, maybe. Yeah. Generally, it's trending higher, isn't it? I mean, you know, let's go up the time. So as far as the 200 period moving average is concerned, it's all the way down here. Somebody's saying it's going down. Somebody's saying the downtrend, the formation of a higher head and shoulders, high and low. It's certainly trending, Bronson. That's what, you know, that would be the first thing I'd say. It's looping higher, isn't it? But it looks like it may be running out of steam on this particular time frame, doesn't it? So we got a high here back on the 16th, then we went down, then we went up. We didn't get as high as the previous, so that was saying weak, but then we didn't get as low as the weakness. Then we went and broke this previous high the following day. And also on that same day, we broke the previous high, which was back here, which was just below this 1930 level. So that was bullish. We then printed 1935. So we broke the key 1900 level here back at the beginning of January. And then we rallied high, dipped down, rallied high, 1920, the blue line now, 1920 is, or the yellow line, this zone now here, between 1922 and 1980 is our sort of support zone this week at the moment, okay? So we couldn't break 1935 for 1, 2, 3 days. We went back down, but we didn't want to go lower, did we? We didn't want to go below 1918 really. Then we rallied, then we broke this 35, but we couldn't hold it. So it's running out of, the buyers and sellers are sort of in sort of a jostling position. They're trying to move it lower, but again, look what happened yesterday. The low yesterday was still above the low of Tuesday. So we went down this time into the 1922 zone and bounced off it on the PMI data, on the data. So we rallied, but again, look at this. We broke the previous resistance at 1935, but we couldn't print a new high on Tuesday of what we got to earlier on Tuesday. Okay, so 1942 was the intraday high for gold for yesterday, and we closed lower. And today we've gone lower. So again, depending on what time frame you're trading this, it's sort of biased to the upside, but the moving averages are flattening out and becoming a bit unclear. Okay, so let's zoom this up to see what's going on today. So we rolled over. Remember what I said, the high for today is lower than the high for yesterday. Currently, the low for today is above the low of yesterday, but obviously we've still got a lot today to go. So this 1918.25 lower is key, and this 1922 level, the big round number 1922.00 is key, but we're heading down to it. So again, as an intraday trader, that triggered short there at whatever time it was earlier this morning. Don't know what time that is. It's give me the time. Why isn't it showing me the time? Anyway, it's been short there. Our stop loss for gain would have been sort of around about here. The again safe one would have been there. So again, that's our entries here. So again, that's 770 points we're looking for at least. So that's our stop loss. So the entry was there just above the blue line, which is the 50 period moving average. So there's our risk again, risk reward. There's our risk. So we want at least that amount. What do we say that was? Oh, hang on a minute. It's 833. So we want 833. I haven't quite got there yet. 833, still, yeah, down here. We would have just got the 870 in the last hour. But there was a big retrace, but it didn't break the 20-day moving average. You could have closed out there for a small loss and then got back in here, and your stop loss would have been a bit tighter. So if you'd moved that down, your stop loss would have been a bit tighter. But let's assume you triggered that when it first triggered, and you're still in it, and that's still looking to move down. So 1922 is the target to the downside, I'd say, on that one. Then that low from yesterday, which took us even lower than that, didn't it? And interestingly, you might want to put the low from Monday, the weekly low, which is at 1911, which would take it under the 200 period hourly moving average if we spike that again today. But so it's trending lower at the moment. Obviously, Bank Canada news may change that. Who knows? Unlikely to, but we should see how that goes. But it's moving lower today. Right, let's have a look. Tobago, that was Langer. Gold. Langer, are you still here? I hope you're still here. I assume you're still here. So look, what time frame are you looking at this? Or is Langer still here? Are you still here? Oh, she's still here. Sorry, let me get that. Come on, my word. What's going on today? So where did I get to? Who was next? Somebody's asking about the set with the moving average. Somebody's asking about the set with the moving average. So that's gold on an intraday basis. If you want a different time frame, please let me know. Weekly, you know, it's still bid, isn't it? That's a strong. There we go. That's a strong gold market currently. The daily is still strong as well, my friends. So be careful not going short too much. Although it's the bigger candles are the up candles, aren't it? Have we run out of steam around this 1935? Far too early to tell. A big support is there at 1888. This gold line here on the daily time frame, but the 4 hour also triggered short there at 4 o'clock this morning. A weaker break for 4 hour traders, but obviously you got bigger target and bigger stop loss. So again, stop loss up there around about 1939 at the top of this level. So if you're an end of 4 hour trader, that seems to be run out of resistance on it. 1937.45, triggered short, a weak short, admittedly at 1927.47. So that's the risk, one risk, if you like, 993 points you're looking for from that at least. And you know that would take you to the, you'd have to break the 50 period moving average. So 90, yeah, you might have to maybe let's see how that goes. But that's the 4 hour traders triggered short. It may not work out, but certainly you might want to get out before 900 points there at the 50 period moving average. For the 4 hour, but certainly the 1 hour is triggered short and out and then back in, and he's still short and we're still moving down. 1922, 1918, perhaps first targets for the 1 hour trader. Langer, I hope that's answered your question, my friend. Somebody's gone offline. Friday, when I trade with stop loss, it keeps hitting my stop loss, but when I trade without stop loss, it won't. Should I continue trading without stop loss? No, Friday, because the market can just keep going. You've got to put your stop loss where the market is telling you to put the stop loss. Let me just show you what I mean by that. Let me just open a clean chart instead of all these. I don't know. Well, Friday, you asked the question. What's your? Oh, he's gone. Friday's not here anymore. Oh well. No, let me answer the question. So the market is what the market is. You can't put it just 10 pips away or 5 pips away. You've got to put it where the market is telling you to put it. So let me pick a completely different chart. I don't know. Somebody give me a chart that's actually. Let's go back to this Nasdaq chart. Some of you are interested in the Nasdaq chart. So this long position here that triggered here on the 10th of January. Okay. Where did the market turn? Where could the market go back to? Okay, that's what you've got to ask yourself as a swing trader. That's what this session is showing you. As a swing trader, where did the market turn? Well, where it pivoted. So really, the market could go down to here, couldn't it? Our system didn't trigger till we got here. Okay, so that was my entry. My stop loss, therefore, is here. Sorry, my entry's there. That yellow line there. So the market before that, before it turned around, it'd been going down, hadn't it? Then it went sideways here. So really, it could easily go down to test as low as that level there, couldn't it? That's why that's really the biggest stop loss you could probably need to put on this particular strategy, the low here. So the trigger, the entry here on the 10th of January, but the market made a low here at the end of December, 28th of December. So that would be the real turning point. That's the real turning point. So, you know, from a safety conservative point of view. However, many systems, and this strategy here, this one with this trigger in here, you could comfortably, I'd say, you could certainly comfortably move the stop loss up to here, the bottom of this candle, because you've got in here and it's it's only 2 candles behind. So, you know, no, really, I'm going back to what I'm saying. That's where your stop loss should be. Because, you know, we didn't know this was going to do this, did we, when this triggered? It could have easily done that and then gone even lower, couldn't it? Because that's what markets do. So, you know, I'm Langer, hello, my friend. The goal is the goal analysis enough for the daily? If you want more intraday stuff, let me know. But I'm just explaining Friday's question here. No, that's where the stop loss sort of needs to be, the turn in the market. That's what pivot points and swing trading shows you. If you're not trading that way, if you're not a trend following trader using a different strategy, that's a different kettle of fish. So if we look at a different profile, just to what's this trend following? No, actually rate of return. No, this is trend following as well. Sorry, let me just go profile. Where's my Bollinger Band one gone? Actually, let me use this one because this has got some contrasting. The green lines on here are okay. It's moving averages though. It's not. You can use the lines for support. That's what I was trying to say. Okay, let's So this is a different setup. Same. So this is the Nasdaq. This is the 1 minute. This is going right down to 1 minute time frame. But you know, I'm going to come demonstrate the significance of stop losses. So here, so for instance, that last big trade here. Let me zoom this up a bit. So it's the other extreme. So again, the beauty of technical analysis, it doesn't matter what asset it is, or it shouldn't matter what asset it is, or what time frame you're trading. So the last big short here for this the Nasdaq here today, basically on the last minute, would have been there at 11,776. It went triggered short on this strategy because the moving averages here are crossed, and the stop loss, ideally, you know, it's big down candle, so ideally it should be above the turn again. See where so the stop loss is there, really. And it's, you know, there's the entry candle, so it's 1, 2, 3, 4 candles. That's fairly typical. It's through this high level from earlier on today. So that's your risk reward. Okay, that's your risk. It immediately for 1, 2, 3, 4, 5 minutes reversed back over these moving averages, back over that. So you could have got out and closed that out as a losing trade there, and then gone short again here, or gone short here. But let's assume we're still. In fact, you would have done that. That would have taken you out if you hadn't had a stop. If you'd just been following the moving average. But here we've got our stop loss up here. We've got in here, so we're just letting it run. Yes, it reversed to our moving average, but so that's our reverse. This is 1,014 points. So 1,014 points is sort of around about here. 1,014, sort of around about here, which we got to, you know, eventually, having jiggled about a bit, and then it's reversed again. But as this is opened, as this has moved down, as that's reversed, you could have got out there and probably re-entered it. It's broken through the low here again, because but we're all the way, although it broke out of over the blue line now. This is a 1 minute chart, so I mean, strictly you should have got out. But again, this is the different setup. So this is the AMA and the TEMA. Again, watch my swing trade strategy. You want to set it. The strategy, I mean, the system doesn't matter. It's the process that's the most important thing, guys. So here, short here, out there, back in again here, and we're still short because look, the moving averages are in unison, aren't they? We're going down, we're still going down. I mean, it looks a big move, but it's only the minute chart, but we're still, you know, so from here, we're still very much in the trade, 2,700 and what's it points later. Our stop loss now, though, has obviously been trailing down, so it's probably there. Our stop loss now, my stop loss would probably be there now, so we've locked in. This is guaranteed profit now, isn't it? As we've moved down, I might have, you know, it's been a big, don't get too aggressive with moving it, okay? So I would still leave it round about there, 11,750, what's that, 11,754. So yeah, so this is our guarantee. We can't lose now on this trade because we got in here. And this is our guaranteed win. This is 11,766 to 11,754. I mean, it's not great. It's not a massive amount, but it's a fair amount of points that are guaranteed, and we're just letting it run. So if you're just going to watch this, the problem with watching it, these scalpers, these 1 minute systems, is you get too close to it. So, but the trend is running. You might want to bring it down there now. It is moving. Aggressive traders would perhaps have it here to lock in some more as it's different. But remember, it's only a 1 minute time frame. But anyway, the point is, have a stop loss. With this strategy, you don't need a target. That's the other thing. You're just letting the profits run. Okay, as you saw, if you're doing it strictly, you would have got out there and re-entered as it's broken under this red line here. Again, it's what you would have how that strategy was. But again, if you're looking for strategy, watch the webinars on how to run the strategies. Okay. No more, guys. Very, very quiet. No more requests for assets. Any questions about anything I've been talking about today? Time is nearly up, but I'm happy to stay a bit long because we had a bit of a mess at the beginning. Langer, do you want gold on a different time frame? Friday's left. I've explained the move now for Habib. Thank you very much. So there we go. So that's that particular step. Let me go back to my default profile. I just call it default because it's got my preferred moving averages on. Okay. So there's no more questions, guys. I'm going to wrap it up on the hour, but let me just finish with a review of what's going on. So dollar index at the moment, this is the main measure of how, people say how strong the dollar is. It's moved down, not to test last week's low at 101.25, but it's above Monday's low so far today. It's above Tuesday's low, so it's sort of ticking higher, but it can't break over 102. So resistance today is the big round 102 level again, as it has been most of the week. Euro dollar on a 1 hour time frame couldn't hold 109 this morning, as we said earlier. It was short at 9 o'clock, or whatever time that was, and it's still short. And there's those levels we talked about earlier. The 108.54 and then the 108.35 where the 200 hour is coming. So that's trending lower. Dollar yen, similarly, couldn't hold 131 yesterday, came back to test under 130 again yesterday, and it's broken under that again this morning. So another one that's triggered short from a rejection of this this pivot area here through 130.40. Here on this strategy here, it went short there this morning. I don't know why it doesn't do it all the way down, but there we go. Let me just answer that question. Langer, could you remind me about those moving averages? Of course. Again, these are just the ones I use. So I've got a pen and paper, Langer. Okay. And again, guys, watch let me go to our, if we go to our webinar, I'll come back to that in a minute. I've got the calendar. Is the calendar gone? No, it's the wrong one. I want to show you that. I'm going to show you that in a minute. Where's the calendar gone? That one. We go to the our website. You go to our webinar. So under the tools are all the things you can add to your charts. The education is all the stuff we've done. So there's videos, there's e-courses, there's e-books you can download. Obviously the webinars, today is an example of one. How-to webinars, our analysis stuff we write, podcasts, and the calendar, which is, or the earnings calendar, which is obviously very relevant to this week. So under webinars, Langer, is all the past webinars. So if you go down here, these are the ones that are coming up. If you go down here, you'll see the past webinars recording. And what we're looking at is the EMA crossing strategy. So you can watch the actual webinar on how to set up your EMA strategy. I'm going to explain to you in a minute, and I'm saying, where is it? Why isn't it here? For some reason it's not here. I obviously haven't done it very recently, so they've dropped it off the marketing site. It's a bit of a disappointment, never mind. I'll word with the marketeers later on. So Langer, to answer your question, the blue line is the 5-period exponential. Actually, let me show you what to do, okay? So let's do a new chart. So we're going to insert indicators, moving average, in fact, trend, that's popped up there, but it's a trendy, so it's a moving average. So I like the brown line for the 200, so I like the 200. So there's the 200 period here. So I'm going to insert the others to do this. So moving average, this time we want the 5-period, and we have it exponential. So it's this one, because we're doing intraday. I like it, it's blue color, or it's not blue color, it's an aqua color. Anyway, let's use aqua for the sake of it. There's the 5-period, that's closer. Then we're going to insert another one, moving average. This time we're going to insert the 9, and that's a yellow one. So that's our medium speed moving average. That's further away from the price action than the 5. So when they cross, that's an interesting one. So there, they cross here. That's, take the grid off here. So they've crossed there, haven't they? This here, the blue, the 5-period has gone above the 9-period, so that's a potential. Potential trade. That's the first signal. But we need to break the faster moving one first. So we're going to insert another one to confirm the movement up, because at this point, there's a big candle here. We had been going down, hadn't we? So we then insert indicators. So this moving average, indicators, moving average. We're now going to put in the 21, which is, I can't remember what color the 20, what's the 20? Oh, it's a magenta color, isn't it? So it's this, where's magenta? There it is. So that's the confirmation. So in fact, it had actually, interestingly, because it was so violent, this move in this 1 hour, it was actually above the 21 at the time as well. So that would have been here on this 1 hour time. So that would have been the last long entry. It's moved up. Our stop loss, here's a good example of why, it can be really difficult. The stop loss really, should have been down there. But as this took off, you could have moved this up quite aggressively, couldn't you? So certainly to there. As it started moving up, you would have moved up there. So as it started moving, so at this point, when we're still going up, so here, at this candle here, the stop loss now would have been up there, sort of just behind this one there. It's gone up next one, so you might have got a bit aggressive, get moved up. It's still going up at this candle is a down candle, first down candle. So we probably stepped. You could have got after that. At this candle here, I would have probably moved it up to here, the stop loss, to lock in some profits. And then during this candle, you would have been stopped out because the stop loss is up here. It's rolled over. It's also broken the 9-period. But it's also, so that's closed your long trade from here to here using this strategy there. So you would have got whatever that was, 117. That's 17 points, 117. Yeah, 17 pips there on that move up this morning. And then we've gone short, as we said here. As that's closed out, we've gone short there at 108.84, but with our initial stop loss, as we said earlier, we've done all this before, haven't we? I don't know why I'm doing this again. With our initial stop loss up there, the top of the entry candle, because it was so big, basically. But now, as I said earlier, we'd have dragged our stop loss probably down at the moment here on an end of hour base. I would have had the stop loss where my entry was. So I'm not going to lose anything on this trade unless there's a big reversal at the moment. And I wouldn't have moved it because these 2 hours were quite, I wouldn't have moved it before then because the 2 previous hours were quite volatile, weren't they? We spiked all the way up there. So the moment on the euro, if I'm trading this on this 1 hour system, I'm still short. My stop loss is 108.86. Let's move that one out of the way. Around, which is my entry, so I'm still short. If this continues to move down, I might start moving it down I might even, just to make sure I win something now, move it down to the bottom of these 2 candles here. So at least I'm making a little bit of a profit, even if it reverses aggressively at the moment. So that's trend following moving averages. Langer, sorry, you asked a question. Could you please remind me about, so they're the moving average, do they work on all time? Absolutely, absolutely, because that's what trends do. They trend in different time frames. So that's using it on the 1 hour. You can even use it on the 1 minute. Same principle. You just got to use the same rules. So what's happening on the 1 minute? It was long to up here, and now it's looking, this is looking to go short, isn't it? If we go the other, have you got me? So that there's the 5 and the 9 looking to cross. It's obviously a lot more volatile. There's less distance moved, but yes, it works on all time frames. So here it's been short but very messy. Here it's gone long, and at the moment it's looking to go short. So we're out of that long trade. So again, if we'd gone long here, trailed it, you know, stop loss would have been down here initially, trailed it up again. That's big up candle. I would have been stopped out here, so we'd have made a bit there. But it's also triggering, it hasn't actually triggered short yet. The 20 is holding, so that's long trade is closed, but it hasn't triggered a short trade on the 1 minute. If we go to the 4 hour, the other extreme, not the other extreme, but that is what's happening. It's looking to go short, although we can't make a decision on this because this is just started. This is the 12 o'clock candle, which won't close till 1600 hours. So the 4 hours looking to roll over from a long position all the way back here. Sorry, all the way back here. That was long. Would have stopped you out there probably. Would have got back in earlier this week, and you've gone long again there, and that's looking to close you out at the moment. Okay, they do work on all time frames, absolutely. That's the beauty of technical analysis, my friend. Let me just close out. I don't need that anymore. So that's where we are today. So I'm going to wrap up today, guys. If there's no more requests for indicators or charts, so say thank you for your time today. I was going to have some more guys in. So tomorrow, nice indicator. I really like the VWAP. It's not on our MT4 platform, but you can find it in the MT5 app store, if you like. The volume weighted average price. Do join Otter for that. It's a really nice indicator. Getting out of a trade, like we've just seen with a trailing stop loss. There's lots of ways to getting out of a trade, but it's only then you only make a profit or make a loss when you close your trade. Exit strategies, part 1 with Andrea on Tuesday, part 2 in February. No, you've got Langer. You've got to watch the webinar, Langer. You've got to wait till they actually cross. You've got to wait till the thing has actually closed. The time frame you're trading, the candle has closed. So here that was short, and then I can't remember what's this. It's dollar index. So dollar index on the 1 hour time frame using this strategy is long. It went long here. So the blue has crossed the yellow, and it's also crossed the 21 EMA in the same hour. That doesn't always happen. So this particular asset is long from 101.75 this morning. The stop loss would have been at the bottom of the candle you entered. So you're still long. Your stop loss is really still there. It's trying to edge up, but it hasn't really moved up. I mean, if you want to be, you could have moved up there. So it's still out of profit because you got in here. Well, actually, you're in profit a little bit because it's at 101.79. You got in at 101.75, but your stop loss is down here, so you still could lose that trade, obviously. But again, if you want to be really aggressive, this candle is still forming. So, you know, 1, 2, 3. I mean, you could have dragged it up to the bottom of the third candle back, if you like. So the closed candle is 1, 2, 3 back. So you haven't quite locked in a no lose trade, but that's at the stop loss. If you're being really aggressive, stop loss is now there, 101.71, and your entry is 101.75. So you're only going to lose 4 pips if that does stop you out there. You've got to wait till it crosses, though. That's the point, Langer. You've got to have patience and discipline. You see it happening, but you've got to wait till it actually crosses, my friend. Okay, but thank you for the question. I say exit strategies with Andrea and lots more going on. Pivot points, trend strategies for Forex and stocks. We'll talk more about the strategy we looked at today. How to set them up, some more strategies as well on the 7th. Candlestick patterns, basic candlesticks, lots and lots of patterns. multiple time frames, 21st, price action, no indicators, like all those lines we've had today, no indicators, just price action. Marvelous Fibonacci theory, looking at multiple time frames as well on the 21st. The COT report and the awesome oscillator to finish out February. So, guys, if you've got any requests for webinar topics, whether it's be indicators or fundamentals, economic numbers, economic systems, please let us know. We'll do them. We're here to help, basically. So, if there are no more questions, ladies and gentlemen, I will call it a day. And go and get some lunch. Great trading books. Every good trader should have at least read these books at least once. If you haven't got them in your library, do get them. Well worth any investment. Any serious trader would have read these and more. My favorite book from last year, these books are all very old actually. You know, that was first written, this is 100 years old now, The Reminiscence of a Stock Operator. Trading the Zone was written in 2000. And first Market Wizard book was written back in 1989, I think it was. But anyway, my favorite book from last year was this one by Tom Hugard, The Best Loser Wins. He talks about a lot of the stuff I talk about, my approach to trading, it being a mindset here, why normal thinking never wins in the trading game. He's now a high-stake day trader. He did my job for another broker based in London. He had a much higher profile than I have. But now he trades for himself on a daily basis. A Danish guy, very entertaining, and taught the hind legs off a donkey. And I'm sure he wouldn't mind me saying it. We've never actually met, but good guy, well versed, and talks a lot of sense. You know, when your winners are winning, you know, you add to them. Most people don't do that. They let their losers get bigger. It's simple as that, guys. It's what we talked about yesterday. A lot. You know, cut your losing trade short. Admit that you can lose. But yeah, he trades many pounds per point or dollars per point. Fascinating book, really easy to read. Best Loser Wins. My favorite book, trading book from last year. So anyway, if you're brand new to Forex, Anna Cooling's Forex for Beginners is still my favorite introduction to Forex. Really helpful, really well written, nice and easy to read. Forex trading book. So thank you, everybody. Any questions? Webinars at hfm.com. Follow me on Facebook. Follow me on Twitter as well. HF_analysis is my Twitter handle. Obviously, the company one is HFM. And there's lots and lots of helpful people on Twitter, my friends. So excuse me, do join them. Right, I need a drink at least. Talk too much. So take care. No more questions, no more assets. We'll call it a wrap. Okay. All the best, everyone. And as I say, may the trend be with you and may the pitch be with you. All the very best. Always manage your risk, ladies and gentlemen.